The mathematics is inevitable failure. And that mathematics is working against you. And that doesn't matter if you have the most intelligent, the most sincere and earnest and honest president in the world. It's very little that he can do about that situation. It's Endgame.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 15th through July 22nd, 2024, while supplies last. First, we feature backdated 1-ounce gold Canadian maples at the lowest price in years, at just $65 over spot. Next, we have backdated gold 1/10-ounce Eagles at $39 over melt per coin. We also have 2024 1-ounce Silver Britannia at $3.29 over spot. And finally, we're offering Dealer's Choice Constitutional Silver half dollars at $2.50 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Francis Hunt, the Market Sniper. Francis, thank you so much for joining us today.
Delighted to be joining you from the jungles of Miami, Elijah. Thank you for having me on.
I did want to discuss what we're seeing in the gold market these last couple days. We're recording this on Wednesday, and yesterday and today it seems like gold is really making new all-time highs, testing that $2,500 level. Your take on what's happening right now?
Yes, fascinating, Elijah. And so first of all, great to be sharing the moment with you almost on better part of a 2,480 run that occurred the back end of yesterday. I think we're going to get a bit of rejection here. We'll go into that technically now, but the dollar is the big part of that story, because we've also seen, for those that follow crypto, an enlivening of Bitcoin that was looking very, very flat. Gold has been far more consistent in its upward trajectory. We are seeing a little bit of lag still on silver, it must be pointed out. So this is, as I like to say, sort of God market against the anti-fiats, showing its strength. They are revitalizing, and you're getting a little bit of the same with Bitcoin being fairly prominent in the crypto market. But to me, this is the real sound money. Gold, big new high. Technically, I'll tell you what I think comes next, but this is pointing to the dollar. If I can just make a comment on the dollar and interject that into your question, Elijah, the key thing is the first quarter. I'm gonna paraphrase a little bit here, so it's not to the exactitude. But first quarter was all about the rest of the world slowing down, but the US is awesome. The labor market's still strong. Everything like that. The second quarter, a couple of times we pointed out that data tends to come in trends too. H2, which we kind of finished with the back end of June, we started to see a little bit of staling out of the numbers coming out of the States, where we both are based right now. And the last week and a half, we actually had a bad undershoot on core CPI, so that was recent. And just before that, we had an overshoot on the unemployment number as well. So what's actually coming to the fore is that, retail is getting hammered. The consumers are getting hammered, and this is a far more precarious time for the average man in the street, which is something we've been saying for quite some time. Data tends to lag. And so since we went into H2, we ended March and we started going April, May, June. We've started to see less awesome, everything is awesome stats. But the funny thing was that the dollar didn't really respond particularly to that. You continue to have the USD go up against the JPY. Everything was going up. It's a yen weakness trade, not a dollar strength trade, as we like to say. But suddenly, on the most recent data, we had a big ascending rising wedge. I'll show you that technically in a minute. We had this big spit down in the dollar, and that's suddenly a little bit of reality check on the strength of the dollar. And this is what's been driving gold higher. And it's even brought a more moribund crypto back to life, along with a few other things involving Trump, which I'm not sure you're ready to get into, but a couple of other drivers. So that's the more fullness of the answer. We've seen real weakness in the dollar coming in as well.
I did want to ask you about, obviously, the events over the weekend. Is that going to have impact on things financially? I know a lot of people are maybe, obviously concerned about the nation, concerned about Trump with the attempted assassination attempt, and really concerned about the media and the reporting on all this, because there are a lot of questions out there, and just the trustworthiness and security of, the highest office in the land. This is a former president. Your perspective on that, does it have any impact financially?
I'll stick to the financial market side of that. I don't want to enrage with my own personal opinions, but what I will say is that, if you look at the outcomes of the events, and I always ask who benefits from the stage of events, the outcome is a very galvanizing of the right, which is quite likely in a well-counted, fairly counted election to lead to possibilities of a landslide victory. The other thing that's interesting, and that's one of the reasons why Bitcoin went up as well as gold, is that he's seen to be pro crypto. It's kind of wasn't always that way, and it's sort of morphed and getting framed a little bit that way as well. And also the possibility that conflicts like Ukraine might cease, might be better for, some parts of the economy, people getting a little bit strong. But the strength in Trump is leading to strength in, for now, the possibility of sound money or money alternatives at the expense of the dollar. I don't agree 100% necessarily with that framing, but it certainly galvanized the base of one side of the left versus right game. And one would expect that the possibilities or probabilities of a victory go up, assuming a sound election is conducted. That would be all I could possibly say. Also, as the business guy, that's also the tag he's got, we would expect the possible weakness in the dollar strength of stock market as well. So that shores up the debt market a little bit and takes some of the pressure off the interest rates environment. Again, I'm not sure it's 100% merited, but that appears to be the framing. So there's a difference between framing and reality, but that appears to be the expected framing by the financial media.
And can we look now at the charts and see what we're seeing in gold as we're really, again, making new all-time highs these last couple of days?
100%. And first of all, I also want to put in a slight admission of being inaccurate on something that we've said technically. So when you're talking about charts in the future, you're doing a probability-based assessments on what's likely to come. So the game is not never be wrong. You absolutely are going to be inaccurate and wrong. I prefer the phrase inaccurate as less ego investment in it, but for laymen, it's just being wrong. And I want to highlight it's what it tells you when you're wrong about the market. And I'll tell you, give you some color to that now and explain what we've saying. We've generally been exceedingly bullish this period. And on the macro, we've continued to reiterate doorstep of 3,000. However, on a shorter time frame, we did point out this structure here. We said, wow, that's kind of hard sells coming through on the gold. And then we got a weak bounce there. We did say, listen, I'm never going to change being gold invested, but there is a possibility that you might have a head and shoulder drawdown. And I threw $500 at just hedging against such an event. And what actually ended up happening, instead of the 2,300 level being a neckline for a small reversal to the downside on further dollar strength, because the dollar had been building most months this year. Again, the dollar index, the dollar has traded higher. Not violently, but consistently. There were just 2 months where it was very small little off markets. So we thought we could get a little bit of a blow-off moment of dollar strength. You pull back. What ended up happening is that, completely contrary to my very rare, slightly bearish cautionary statement on gold, you absolutely rocketed away from that 2,300 support and went straight into the new high category. So that was a very easy and cheap little bit of insurance that I put on, and it was invalidated there on the right shoulder. I think I said left shoulder last time. Sorry, I mean right. So that's great news. The reversal never happened. I'd be a little more circumspect about people going in too aggressively right here. So this is a broadening structure with an ascending aspect to it. And the macro we could have a little bit of pause. So that was a great high, and it is a marginally higher high. We call these marginally higher highs. They often point to one of two things. So there is a new small shadow, but again, going back to my error of wrong, the one moment you bias to a possibility of bearish, you were proven wrong. This tells me it's broadly a strong market. And I want to also highlight this little fractal did very much the same thing on a lower time frame. You see that? and then you were trading off. You had a little bit of a candle there that could be a right shoulder. On a lower time frame, you went up and you came back down, and in the end, you just melted up. So sometimes markets, these crazy, slightly bearish technical structures, when you're in a really dominant market, they just turn into continuation anyway, even though they have some marginally higher highs. In a normal technical environment, I wouldn't be getting in here. So I trade leverage, long gold often. I rarely trade it short, and I'm a long-term investor. I save in gold. Right now, I would expect there is a possibility that you get a little bit of a coming down. I think the 2.5 is a very psychological level. We've broken 1, we've broken 2. We've spoken about our target likely to take us to the 2.9s, the gateway to the 3K. In between that 2 and 3K, 2.5 is probably the most significant round number. And the problem is for central banks, that makes for ugly headlines, and they don't tend to like that too much. So I would expect there could be a spell of pushback over here, and maybe they will try put a bit of a spine back into the dollar for a spell, at least. And in the worst case scenario, you could come down to 2,300. Generally, technically, when we get an ascending broadening structure, the ascent comes from the splitter. So it is getting more volatile, so that it's going higher and lower. You start to get volatility. Generally, we normally bearish markets like that. But as I pointed out, you could have made that case over here, and in the end, it just tightened up and melted up. So it's quite uncertain, but I wouldn't get leverage long right now. And if you're a buyer, maybe you stack a bit of fiat and you can pick up a little bit more inside this range that I've described here with the broadening structure, so the double-lined area. 2-3, though, for now, is a very strong support, and it's now resisted once, twice, and 3 times. So it seems to be a great floor. So you might have to buy somewhere between the 2-3 and the 2-4 range. So getting anything in 2-300s might turn out well. Again, however, if we add a demand, there's this one wild card that I've got to keep leaving out here. Because as I say, this is not typically technically high confidence structure for me. If we were to have a major demand destroying event, you could still end up eventually with a head and shoulder just of greater scale. And even if you have a bad banking event, gold can trade off down in the price, the paper markets, in spite of it later recovering exceedingly well. So I want to remind everybody of the CV19 events. You recovered violently, but you did dip. And on silver, of course, it was worse. You went really far down. It's a higher beta version. And I'm concerned that silver has not really been following. So for now, this looks like a central bank institutional play, not so much the retail play. So you could end up, if we sold off to the 2-3, looking at another head and shoulder. So there's still a bit of doubt around this whole structure technically. I'm not a fan, and technically we're not a fan of marginally higher highs, because that points to continual distribution the minute you start hitting the headlines. So don't chase in leverage now, accumulate deeper in the range. Slight wild card on a bigger time frame, demand destroying event, you could then still have a reversal take place, but that would be in a very serious economic downturn type environment if we are to be having that. So a little bit of a nuanced answer. It's not so clear on a number of levels across time frames. So I hope that comes across. But as an investment long term, no change. Buy the big dips.
Now, as for silver, can you show us the chart there? I know it's not really following gold at the moment.
Yes. Silver's slightly disappointing, and that's a concern, you see, because we see the gold-silver ratio go up as a result of that. If you have a look at that, silver's been turned down. It's a very seminal level, this 30 level. We've highlighted it on bigger time frames before, so I'll just take you out. Legacy high previously on the Wall Street bets over there. And if I just take some of my artwork off, you'll see that this has been a choppy, and again, this just adds to the slightly cautionary aspect, the choppiness for silver. These selling wicks up top here, there, and there. So there's no confirmation with silver joining in with the same zeal as we had previously. So over here, we're on quite a big time frame. The months before, we had real confirmation out of silver there, there, and there. 3 great months joining in with gold, but a little bit more resistance. Maybe that's pops for everybody, but I'm pointing to these selling wicks. not being able to hold above, not being able to hold above, and close to that Wall Street bets high at the moment. So we could also have a bit of a technical pullback into range. So I wouldn't be a massive accumulator at these levels. Again, long-term, huge bull silver. Choose your buying points. Entries matter, more ounces, etc. Are a little bit not a technical entry point for both gold and silver right now. A little bit of choppiness and uncertainty.
Now, do you have any particular price points you think that silver could pull back from here?
It's a good question. And I'll show you the key levels as they've popped for me prior. And we'll put those back on. You'll see we're very close to that 30.1 level. I think we could get under. There was a support here. So the wild card aside, a major demand destroying event, something that equates similarly to the events of March 2020, that's a deep potential. But you would look over here, for example, there was real technical support after that pullback over there. I would like to see that hold. So if I give you the value on that to answer the question, that's the low was 28. So it's a dip below the 30 mark. We're there or thereabouts now. We're just a bit above. I would like to see that 28.5 hold, the 28.5 handle. So we could churn around the 30 level. A good outcome for us, and I'll keep dropping it down timeframes. That's 3 days. That's 10 days. A really good outcome for us would be a coming down, but not too aggressively. We see a little bit of a box there that we've broken. And again, unfortunately, marginally higher highs, you could argue small head and shoulder. I'll draw that again on a lower time frame for some people. But that can point to a small correction. You know, it's not end of the world stuff. So again, providing the wild card demand destroying event doesn't come, we could be in a structure like this that comes down somewhere here. And those tend to end very well. I want to highlight that's exactly what happened on gold on the 2000 mark before racing well beyond 2-3. So if you see what I've drawn, and the $30 silver is that number. You know, the $30 silver was very much the $2,000 gold. And I'll show you that gold event that I'm referring. So a little bit of a dull period in here, providing we hold that 28.5. You could find accumulating in and around just around 29.25, somewhere in that box zone, a very good area where you'll get a bit of upward drift, and then we're ready to go again, which could be super exciting for the silver guys. So that tightening, good chance of that. So why do we keep drawing these patterns? Why these? Because these are continuation patterns. Continuation is the higher probability than reversal. This is what you've been getting so far. So in terms of, you know, trends, this is what you've been getting so far for quite some time. I'll just show you, I'll go back to gold to show you why I think silver might follow and do what gold did, just to highlight that for you. It was also a very key level for gold. So we'll take those nice sketches away and just put you back here. I was highlighting it earlier. You see the blue line is your 2000 mark over there. Once we broke 2000, we called that a seminal key break out of the key pattern. As soon as we said that, of course, it came back. And then you got this kind of big bloated second impulse like that. Very low vol, super low a third, and that turned into an amazing little squeeze for gold, and you ran. So you sort of sat on the new step, if I can, or the shelf on your wall of the $2,000 mark. And that set up a very good leveraged bull market. So that's a great time for a leverage trade, providing you know what you're doing, you understand the laws of money management, you don't oversize, etc., etc. But that gave extreme profits to us, and that was an exceptional period for gold. Really fast profits and gains right the way up to this level. And actually, we're not much higher today after an extended time period. You know, that was halfway through April, and you know, we're a tiny bit higher. We did make a new high, but we are turning down. We're almost mid-July going August now. So that was a great run. And I think silver on the $30 could be looking to do that potentially. And that usually sees the $30 just run. So, you know, I mentioned the 28.5. You can see we were below 2000 there, and we actually dipped below 2000 again over there. So you're sort of like a ship with a keel in the water and slightly below water level at your lowest point. And I feel silver has that potential. So a bit more to happen. That's not absolute breakout, runaway markets, which could involve some ups and downs. So choose your entries. This is a choose your entries market, but definitely the only way to trade is long. And I put myself forward as an example of case. I just put $500 of insurance against that, and that money was gone for not trusting gold to hold its own on the 2-3 case. So the bias is long only in my trading environment, and choose your points, but this is not a current entry point. But the support levels that I've mentioned are. And I think silver could be the one next to give us a nice move, but it needs time.
Now, if we want to talk maybe big picture here, you mentioned how gold and silver long term you're very bullish on, and it's important to have that as an insurance policy. Can you expand on that? And especially during this last weekend, obviously the events that occurred, has that changed your view at all? You talked about some of the financial impacts of it, but it seems like regardless of who is elected, we're still not in a good place financially in the US.
Yes, people, my personal assessment is people place way too much store on elections and who's in charge. It's the situation. The situation has slowly built over multiple presidents over the last century to a super hyper indebted situation. In other words, the mathematics is inevitable failure, and that mathematics is working against you. And that doesn't matter if you have the most intelligent, the most sincere and earnest and honest president in the world. It's very little that he can do about that situation. It's Endgame. It's kind of, as I like to describe, that Stuka bomber pilot that's, flying at an incredibly steep angle into a mountain, and 5 seconds before impact you give the controls to the best pilot in the world. Well, physics doesn't see him pull out of that, no matter how hard he pulls. You're hitting the mountain, and you might be able to vary what spots you hit the mountain at, but that the outcome's very unlikely to be any different. It's a coming to an end. So most people get confused with inflation. They get sucked into all the other economic concepts. There is a debt devaluation event coming because there's too much of it around. That unfortunately points to interest rate spikes and control over interest rates being taken away from central banks. I keep reminding people, central banks only get to set interest rates as long as people are believing and buying debt. And the 40-year bull market ended in 2020. So I go back to reminding this, and people keep needing to hear it. That's why I'll keep saying it. And you don't take 40 years to unravel what took an escalator 40 years to get up to. It ends a lot faster and in a far more brutal manner, and that is the reset. And then it becomes a question of what assets do you hold. So we can talk technically about, what's likely to happen the next hour, the next day on gold, but gold preserves your assets and balance sheets like nothing else. And we've seen what gold did for the Japanese against the yen, against the euro, and it was always slightly less for the dollar. Well, now you're getting your dollar spell of weakness, and now you're making new highs on the dollar. There was a period where gold was making new highs against certain currencies, but not the dollar. Well, you've now got that box ticked. So gold's ultimate function cannot be taken away. And the gold is moving from west to east as well. And they know that even more and even better than us. And they are probably going to be the ones having a higher standard of living. And we're probably the ones that are going to be getting a lower standard of living, just generally through the sort of cultural Marxism and the diktats and the various slightly communist direction, unfortunately, the capitalist nations are going into, whilst the old communist nations are actually showing a bit of common business sense. That's not to glorify China. I'm delighted America is the major nation of the world, but unfortunately its trajectory has turned. It has a lot of God-given momentum from the last century, but it's actually floundered that to a large degree, and the momentum has turned. And the best insurance is you hold your balance sheet in your hand in the yellow metal. That's my best take. There is nothing else substitute. Remember, property is financially leveraged. You can go and buy out a ton of houses, but the price is determined by the market. And if everybody else has got 90% loan-to-value mortgages or 50% loan-to mortgages, and that debt unwinds on an interest rate spike, your asset gets repriced by everybody else, not by you. And what you paid is an academic point of interest. Although it's not academic to you, it hurts. So That's what gold doesn't do to you. It saves you from the debt collapse, and we are in a debt-based collapse.
It is a bit freeing to see that, obviously, as you mentioned, people put way too much stake in elections. And if you look at the big picture, we're on this trajectory and nothing's going to stop it. And we can kind of take a step back and maybe stop paying attention to things that we can't control or have almost no impact and start taking into consideration things that we can control. Can you expand on maybe some of these things that we can control and take action today?
That's an excellent framing, Elijah. As I say, lots of things are managed theater, and you have very little control over that and what it is without being specific to any major events. The best thing is bringing it local to yourself. Work, live within your means, couple of safe, sound principles. Eliminate debt from your existence. Own outright the things you own. Protect yourself and your family, make suitable arrangements, get localized in terms of supply chain, which goes right down from electricity, water. But in terms of the financial element, without going, full prepper into the hills, which I still think is something people should be thinking about, but maybe not to go into such detail here. Gold will preserve your financial balance sheet. And that is what you can do. So save in gold. I love that phrase. Your gold is your savings, and it is your balance sheet. Grow the yellow nest egg. And you can see here, a lot of people on the dollar milkshake theory and how dollar will be dominant. Well, gold's at a new high. Even though dollar's been firm most of the year, gold wins. That's the key story. Gold wins. In a debt devaluation, gold wins. We've had gold go up on increasing interest rates, and now you've had gold go up on the possibility of decreasing interest rates. It's heads I win, tails my enemy loses. It's a pretty good bet. You win on both sides, accumulate the precious metals. And even though I've kind of put out technically you could probably get a little bit cheaper, there's nothing wrong with dollar cost averaging, and you can forget about all I say technically. I still personally will always check a chart, and I'd rather accumulate the fiat and get a little bit more. But if you just have a random day and you dollar cost average and you collect an ounce a month or an ounce a quarter or 5 or 10 ounces of silver, whatever you choose to do, you're doing the right thing. But add gold because it moves first, and that gives you comfort. Add silver when you've already got some basis of gold. You can see how getting the silver part right is far more a timing issue, and it is shorter lived and more violent. Most people don't cope with the volatility. So I'm an advocate for both metals, but I think you should have both, and you start with gold. That's your foundation. That's your savings tool. I wouldn't say silver is a safer savings tool. It's more my multiplier to the gold run. It's a little bit of leverage gold, really, and it takes longer, and it's tiny bit harder to get right. But when it's right, it's damn right, and that we will have that day too. Don't get me wrong, but for some people, you would be frustrated by a lack of a new high today, and that's what breaks people's discipline. I want to keep you in the game, so get the easy ticking up that gold is providing, and then strap your turbo on with some silver ounces alongside that.
Fantastic. Well, Francis Hunt, we really appreciate your time today. If our viewers are interested in learning more, where can they go?
We've set up a community that is specifically geared to reset financial security and wealth building. We think the economy is in uncharted territory. The old financial advice is the worst advice. We no longer consider debt a risk-free option. If you feel that, follow our YouTube channel on The Market Sniper. You're welcome to get more charts. The footprints in the sand is the money. That's the one thing I know is not fake. The rich people move markets. Big money moves markets and price discovery. That doesn't mean it can't be manipulated, but when it starts to unravel, you see it in the charts. That's why we always back up our opinions with a charting take, and you'll never be 100% right, but you'll get on the right macro trends, and that's why we're in the gold and silver space. We're on themarketsniper.com as well if you wish to book a call to be a community member. Thanks for having me on, Elijah. Really great.
Fantastic. Thank you so much, Francis. You have a good day and God bless.
Same to you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 15th through July 22nd, 2024, while supplies last. First, we feature backdated 1-ounce gold Canadian maples at the lowest price in years at just $65 over spot. Next, we have backdated gold 1/10-ounce eagles at $39 over melt per coin. We also have 2024 1-ounce Silver Britannia at $3.29 over spot. And finally, we're offering Dealer's Choice Constitutional Silver half dollars at $2.50 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.